Hi everyone, it's Stuart here again. Welcome to Monday. Welcome to the prop trade. It's the first day of the second trading week of February, and not a lot going on today. So I decided to have a look at the London close, European close today, Monday. Stock markets, cash markets here in London close in about half an hour's time. So we'll have a look at trading that. And then we'll look at the week ahead. The week ahead's really quite busy. Let me just move my great big head a bit lower. There we are. Let me just move the microphone, camera a wee bit. There we are. It's a wee bit better, isn't it? There we are. So we are. Oops, link's gone. There we are. Gold is on my chart here. We've held 5,000 for excuse me, most of Friday. We closed round about this level and we've sort of ticked higher a bit this morning. So 5,000, obviously a hugely psychological number. Obviously, I'm sure you all remember all-time highs just a week or so ago at 5,600. We had that massive sell-off last week. Where we went into test 4,400, nearly wiped out all of our. Sorry, you're down here. Nearly wiped out all of our gains for 2026, but we're still bid. And $5,000 an ounce for gold is something we really wouldn't have heard of a few years ago. So here you can see on the hourly chart, nicely bid on this. Zoom this up a bit. Nicely bid on this. There we are. It's a bit bigger, isn't it? Nicely bid on this hourly chart to the upside in the upper half of the Bollinger Band here from early on the 6th. So Friday, Friday it was positive, and we've been positive again today. Opened last night over 5,000. We've held that all day as we've moved up. Big news overnight was obviously the political news out of Japan in particular, with Prime Minister Takaichi. She got a huge majority, much bigger than even she could have anticipated. Over a 2/3 majority for her and her coalition partners. So that means that she basically, it's the lower house was running an election. Very unusual for this time of the year, a winter election in Japan. It was heavy snow. Was all over the country, particularly in the north yesterday, but a big turnout, as the Japanese tend to do. Some countries, of course, have to vote. It's a legal thing. It's not like that in Japan. I know my family in Australia are obliged to vote. It's a legal requirement. But that's a story for another day about making people vote. Some people think it's a good idea, others disagree. But anyway, it was a big, strong turnout. So she's got the mandate she wanted. She's calling herself the Iron Lady of Japan, the Margaret Thatcher. She holds in great esteem. So the market is expecting the Takaichi trade to be on. So if we just look at the markets, in particular stock markets, the Nikkei rallied this morning. It was up 3.89% on close. This is obviously the announcement came out before our derivative markets opened, but we went all the way to 58,500 in the opening trades in Tokyo. Sorry, not in Tokyo, on the derivative market. That was just ahead of the Tokyo Open this morning. And then we sort of give it all back into the European Open here this morning, down at 56,100. But then that provided a floor. And then in the Europe, as the US is open, more enthusiasm for the Japanese stocks, and we're at 57,000 virtually. So again, if we just zoom up to our daily and weekly charts, you can see new all-time highs for the Nikkei on Friday, and we followed through gap on open this morning. It's the daily chart, guys. Gap on open, and then Canberra's in a. Let me just put it back up here. There we are. That's probably a wee bit better. Today everything's a bit messed up. There we are. Anyway, I'm actually in my home office today, so it's I'm not actually in the trading office, but there we are. So yeah, gap on open, and we're down on the day at the moment. But the stock the cash market closed up 3.8%. Obviously helped other markets in Asia. South Korea was up over 4%, and Hong Kong was up close to 2%. Chinese markets are also a bit, well, Chinese markets wobble because obviously the her rhetoric against China has been quite forthright, and it's upsetting the Chinese. Chinese have tried to sort of push her around a wee bit. She's not having any of it, and so therefore talk of that increased defense spending. She got the backing of Trump. Take that as you will. But yeah, she's pushing ahead. So stocks are up. And then interestingly, it came back down. So that's the yen weakened. If we look at the yen this morning, JPY. The JPY cross, just use, I don't know, just use the Aussie because that was expected to move quite significantly. It had obviously a massive Friday. It opened quite positive and then came back just as the stock market opened positively and came back. So here was the open this morning up here to 110.75, and then we came back in again in the Asian trade, closed out in Europe, and then we've bounced again. So weaker yen in as the US markets have opened for the week. So Aussie yen 110.50 now from a high of 110.75. Euro yen 185.70. The dollar yen itself 156, or just shy of 156. The weaker yen, the weaker dollar today, sort of bottomed out here on the US up. So we saw some bit of dollar buying here. So dollar yen's come back from 155.60 to 155.90. A bit of a bounce, but again, if you see on the daily time frame, the yen has picked up surprisingly. We were expecting it to weaken further, but we moved up for well a week. So strong result for her. So it's just, is this going to prompt more intervention from the Bank of Japan if she's got a very strong political mandate? Very difficult for the Bank of Japan to push back on her if she does put pressure on them, given her strong political mandate. But obviously, time will tell eventually. But the yen remains weak historically. If you look at this on a weekly time, you look at the dollar, which isn't great, but you can see dollars accrued here from these spring last year lows down here at 142 all the way to 158.50 on 158.50. Looked like we're going to 160 towards the end of January. We've given some back. Yens came back a wee bit, but again, as you can see on the weekly chart, we're still in this upper half of the Bollinger Giant, still remains bidden. And again, it's this consolidation at highs, which we've talked about before. So the longer this goes sideways, the bigger the breakout. Whether we move up here to 60 and beyond, 160 and beyond, but you can see it's a previous resistance here from the beginning of 2025 as well, around this 158 level, which is where went to last week. And I say we're giving up the ghost a wee bit so far to kick off this week. But the key Bollinger Band level at 20 midline on this weekly chart sits at 154.85 there. And if we go up to the daily time frame, you can see it's very much had a go at it, and then it's come back under it. So sideways action here on the daily time frame is also dollar yen 155.85 at the moment. Needs to break over 158 if we're going to take this much higher and test the 160 level again. It doesn't look like it wants to do that currently. So that's the story out of Japan. As UK is also reeling from political news. Yesterday we had his chief political advisor to Sir Keir Starmer resigned, taking the flak, trying to divert the flak away from the Prime Minister himself. His chief communications director has also resigned today, all around the Epstein situation for Peter Mandelson, what was Lord Peter Mandelson, and his handling of that and his judgment on that has been called into question by both his own backbenchers as well as obviously the opposition party. It all plays into the Reform UK party company that's riding very high in the polls. Another right-wing cabal here in the UK. But as we've just found out this afternoon as well, the leader of the Scottish Party, Labour Party in Scotland, has been the first major big beast, as they call him in political terms, to actually call for Sir Keir to stand down. Lots of people, saying he should hang on, but once this wave starts, this momentum starts, sometimes it's very, very difficult for politicians to ride it out and see it out. So the head of Labour Party in Scotland has called publicly at a speech this afternoon for his resignation. Obviously, that's had impacts on sterling and the stock markets here in the UK. So if we look at pound yen, it's moved, both pulled by the positivity of the yen and struggled by the pressures on sterling, given the political uncertainty. So on Friday, we'd pushed up to the this 214 level, came down over the Asian session again, and then went lower again, weaker sterling this afternoon and into the US Open. It's come back a wee bit for what Anwar's had to say, the guy from Scotland. So 213.50 is where the guppy trades. Sterling against the dollar is at 136.90. So the worry of it this morning, excuse me, has been shrugged off against the dollar, and we're at 136.87. We look at the euro, 87. So we moved to 87.25 and come down 25 pips in the last hour or so to the downside. But sterling in the crosshairs on political uncertainty and unrest, and markets really don't like that. So on open this morning, the FTSE struggled for a little bit of direction initially, whereas the other European markets were moving higher. The FTSE at 10,376 is down on the day, but it's still obviously bid overall. Very strong move we've seen in the FTSE playing catch up over the last year with the US markets, but struggling at these highs, these new all-time highs in the last 4 days at 10,400, and we're at 10,375. So not much down today, but it is a down day for the FTSE, and bounced a wee bit here on the US Open and sort of hanging on to gains, but for the day still in the under half of the Bollinger Band and under the 20-hour moving average at 10,39,900. So I know a lot of you don't trade the FTSE, so I'm going to come off this. Obviously, anything you want to have a know, let me know. Chaz, good afternoon. Anything you want to have a look at, comment on, anything you're trading, let me know. I was trading the DAX earlier this morning on open, and then I've just been, before I came out here, I was trading the DAX and the NASDAQ ahead of open and the Dow, so we up 170 points in my short-term scalping before we came live. So anything else you want to have a look at, do let me know. So the FTSE down on the day and moving still bid on the higher time frame. So let's just go through some of the other markets. Obviously, crypto very much in focus. The key 70,000 was held. We looked okay here on Bitcoin over Friday and the weekend, and we held it, and then we just struggled to pull away from it on Friday, and again over the weekend, again this morning, 71,400. I think in fact we might got even spiked a tad higher on open last night. So 72 we went through, but we've weakened again. The dollar's come back a wee bit, so we're pivoting through the key 70 level. And remember, we did test 60 on Thursday as we tanked lower last week, and the big move to the downside from the previous Thursday when we'd been all the way up here at 88,000. Big old moves. You can see here on the 4-hour candles, as we talked about last week. Big negative candles moving lower. Momentum picked up quite significantly. Now we pitched all the way into 60,000. It was falling by the hour, got to 70 and struggled to move away from it this weekend. So we may have to test 65 and 60 again before we move back up. But the trend as we've been saying for a while now, since we broke out of that range, has been to the downside. So the big breach last week, as we went under 75,000, we didn't stall at any of these previous levels we talked about being the floor of the channel. Remember that 92, 95 upside didn't happen for a day or two. Then we came back into the channel, and then we just broke down through it really aggressively week before last. Our 4 levels broke very, very simple, easily 85, 8,500, and the key, what we thought was the key, or what I thought was going to be a key support at 7,500. Didn't happen. $75,000, which took us all the way back to these intraday lows. So it's a weak support area, even though it's a big round number. They have less significance on the crypto markets, and so we were then, as we said last week, broke into this 2024 channel, and under 70 and 60 is the support at the moment. So there's a big old, here you can see on the daily time, big, significant, strong move down. The only caveat on it is that it was quite a significant and steep fall as far as angle on the chart is concerned, but we did have a big bounce once we got tested 60 on Friday, it was, wasn't it? And then we didn't go anywhere over the weekend, and can't get away from the 70 handle Saturday and Sunday, and we're down again here Monday. So stay with the trend. The big 20-day moving average now sits at our previous support area, one of our previous support areas at 8,500. So 75, 8,500 and 85 now become our upside targets on Bitcoin on an end of day basis, but the trend remains very much to the downside, like we did here. Moved down, went sideways for well over a week, and then big leg down. So we might be sideways for a week or so into the middle of February. Obviously, we've got Lunar New Year as well next week, which could be interesting. Asian markets closed. I might have an interesting impact on crypto, may not. But we shall see. So down we go again for crypto, and the wider, Bitcoin and the wider crypto market remains weak as well. Oil had a good run, but it's come off as we started the new week. It had earlier. Last time I looked, it's back up again now. It'd come down earlier on the lessening or the easing of geopolitical tensions, as Iran said we will continue to talk. So this is just my take on it. It sounds like they're very much on the back foot, and they're trying to avoid any military strikes by the US or the West or Israel again, and so they're desperate to keep talking. It appears the Iranians, the Americans allowed them to move the talks from Turkey to Oman. So we had moved down earlier in the day, but looks like we're back up again this afternoon. So so something must have missed this morning. Earlier this morning, I was not watching this early this morning. We were drifting lower in the European note, and I've been out for the rest of the day. So something's clearly bid that back over $64, and we're at 64.35. So if somebody knows why we've bounced up in oil, let me know. But as you can see here on the hourly chart, it's very much a sideways action the last this first week of February so far. So 62 remains the big support area, and 64, which we're actually over at the moment, is relatively positive here on the intraday move. So some big up moves today. Perhaps somebody knows something called snaps. Or all sorts of things move the oil market, but I don't trade it that often, to be honest. I say Forex, the major moves has been the yen and sterling to a tad as well. It's not a great deal of news to actually move the markets today. But if we look at the majors, let's just look at the US crosses. The euro back to 119 here today. So it's had a good day today. Euro up, dollar down here on the daily basis. We look at our hourly time frame as of Friday. We had that big sell-off over last week and the week before into 118. We're pivoting around 118, but it's a strong day today as the dollar continues to weaken. Let's see if that's going to follow through on more stock buying potentially. But euro dollar now over 119 again. for the first time in a week or so since we had that big sell-off on the 30th of January. So best day in February for euro dollar as well. Aussie back over 70 and eyeing 71. It's one of our better performers this year. The Australian dollar very much bid, and new highs getting tested there. Will we get to 71 this week? We'll have a look at the data in a minute. Big day, big week ahead. Lots of jobs. The official non-farm payrolls and on Wednesday, and CPI consumer price index on Friday. CAD 135.75. That's come back down again. So dollar's weak across the board today. Dollar CAD back down. Support at 135. We're at 135.75 at the moment on the Canadian dollar. Kiwi back over 60, eyeing 61, 60.50. And we were back over that on Friday's close in Gulf and Candle Net and moving higher. So previous high there at 60.75 is our upside target, some 30 odd pips away from where we trade at the moment. So dollar, will it weaken in the week? We shall see. Obviously, we had that big news as we talked about on Friday, the combination of all the jobs data looking relatively weak despite the non-farm payroll coming out. Lots of Fed speak as well on Friday and over the weekend. Daly, Mr. Daly, she was talking about leans towards more cuts in 2026. Jefferson talked about the jobs market stabilising, inflation moderating. Bostic was talking about he's on the other side. He's a bit of a dove, saying we're more or less done, looking for more to come, or not enough. The market will dictate where we come, and again, that's been the mantra from the central banks, hasn't it? We're going to be data dependent. We're going to move as the data dictates to us. It's a big thing Ms. Lagarde was saying last week as well. Obviously, lots of still geopolitics kicking around Iran and Russia and Ukraine still impacting things. The big tech earnings are out of the way. So indices, if we just look at we've got two long trades on Friday night. The Dow's been stopped out. I think we pulled the stop loss up too close. Yeah, I think I haven't moved it on this chart, but I'm sure I'd moved it up and it's got stopped out earlier. It was let's just double check what we had for you. What I'd put up. It's on the trade chat level. Dow 49,927. I thought it'd been taken out. 49. What's that? 49. Is it 927? Did I say? I'm sure it was up here somewhere. That's on 99. Yeah, no, it was here. Yeah, just below our entry. That's right. I pulled it quite up. So that's been stopped out, unfortunately, but that's trading for you. If we look at the opening hours this morning, we got in here on Friday night. We gapped up when we've been up most of this. We'd only just got stopped out. I should be watching that really. 2 o'clock ahead of the open. Now we bounced off our stop loss. If that is, what did I say? It was 927. That's going to be. Oh, look at that. That's just one of those days. Look at that. That's where we moved our stop loss to 49,927 here on our. Look at that. Well, it wasn't just there. That was the hourly. That's the 4-hour candle, but we had gone under it a wee bit. But anyway, that is closed out for a loss. Not much because we got in at 50,027. We're out at 49,927. So it's 80 points on the Dow. But it's still 80 points, isn't it? It's not much of a percentage loss. But the DAX is still in the money. That we did move the stop loss up, and we've recently now. I did move this one earlier. I haven't changed that on the. I think it was about. It must have been here. It was here, wasn't it? It was just now on this account before we came live. We'd got in here on the close on Friday at 24,775, and the stop loss was all the way down here somewhere, just above where Trump started speaking in Davos. The line, I remember that from Friday night on my trading charts, and I did actually put a target on this one. I didn't put a target on the Dow, but this T1 area just over 25,000. So we're at 25,009 at the moment. So our first target on the DAX is 25,023. And that was just from a round number point of view, I think. I haven't got in at 75. So that's in the money. And DAX continues to move up. So it's diverging from the Dow a wee bit. Although Dow's bounced though, hasn't it? Well, we didn't have that move down in the DAX. But anyway, so stock markets here in Europe are stronger here. The Nasdaq, let's go back to the Nasdaq. We didn't take a Nasdaq trade. Holding 25k this afternoon, and again, strong move higher and pushing to all-time highs. In fact, no, but not all-time highs on the Dow. It was the Dow, wasn't it? The Nasdaq moving up, Nasdaq 100 moving up as well today. So that wasn't a trade on Friday night. It was the Dow and the DAX that triggered. But a big bounce back on Friday from this monumental midweek sell-off. Tuesday, Wednesday, Thursday, 3 big, black soldiers to the downside, 3 black crows, but the engulfing candle, the positive close over 25,000 here on the derivative market on Friday was tentative lift, and we followed through again, gap on open this morning, and through 25,150. Next upside target is the key fib level of this last big leg down, which now sits at always did sit at 25,400. That's the upside target here on this fib level. Remember, we had lots of other fib levels on here, but this is the last down leg that, again, looks like it may be over again this time. Remember, we've got to wait till it's over and it's turned. So Friday's intraday low is currently marking our 24,150 level, currently marking our low of this move. So see where it finishes, but upside resistance coinciding, interestingly, there with this flattening. You see the flat moving average, not really, lots of volatility as the Bollinger Bands have squeezed. And remember, this is the NASDAQ 100, the 100 big tech companies, and all the big tech companies have reported, save NVIDIA, which is the week after next. Upside target, 20-day moving average coming to meet this key fib level at 25,400. So that's a big, both round number and technical resistance, with those two key indicators converging at 25,400 level. So watch that significantly this week, and watch 25,000 to the downside, because that gap, body of the candle, may have to be filled. You may have to fill that gap first. There you can see there's a slight one there from Tuesday to Wednesday last week. So see what's going to move this tech market in particular. And the most important one of all, the 6,980.68 is where the S&P 500 sits. Again, a more of a significant engulfing candle on Friday, back into the upper half Bollinger Band, and pushing higher at 7,000. We haven't been able to close over on an end of day basis. We obviously went to that hugely psychological 50,000 level for the Dow on Friday for the first time. So is the S&P going to join it, or are we going to fill this gap from Friday's close to Monday's open at some point this week as well? Those gaps were smothered out on Friday's bounce back and the close, although it was it wasn't a significant one over the 20-day moving average. It did close above it rather than under it. It didn't trigger a trade for me on the S&P 500, although the Dow and the DAX did. And we've got a slight cross here on this mean reverting strategy, but it has been chopping around a lot, hasn't it? But certainly, again, another one with a bit of a leg down. It's probably already got back. If I put the that's a previous extension. That's that last leg down here. There's another leg down here which takes the 61.8 up here somewhere. So we do need to get through that 7,000 level. So the last leg, if that indeed is done now, that intraday high there over 7,000. The low on Friday took us to 6,730, and we've already recovered all of that in one day. So it's a very volatile reaction, and we've gone through today the previous resistance. So whether this fib level is in playing or not, I'd question it given the big move backs. I'm going to take that off. So 7,000 remains a big, thick end of day resistance, and before that, we've closed our closing high here on an end of day basis, which was back on the 28th of January, which is still 12 points shy of 7,000 at 6,988 on our derivative chart, and we trade at 6,966. So still some 22 points shy of that, but we are, as with the other stock markets in the US, consolidating at all-time highs, which is still a positive tone. The longer-term trend remains very much to the upside. If we just flip this up to the weekly, you can see we're still supported by the 20-week. Let me just reset that so you can see that properly. So you can see the Bollinger Band here, the midline of Bollinger. We've been in it, all of 2025, obviously, and all of 2026 so far. So gradually grinding higher here in 2026 at the moment on the S&P 500. A close above 7,000 would be the next big milestone and next big headline for the S&P 500. So there we go. There's our the assets that we can offer you. If there's any questions, guys, Sab or anything, let me know. So let's have a quick look at what's ahead. As I say, it's a major week. Wasn't scheduled, wasn't meant to be, but because of the new government shutdown that lasted 4 or 5 days, we've got delayed, all sorts of delayed. The red stars here on the calendar are delayed numbers. So tomorrow we've got the retail sales, which were delayed for nearly a month. They're expected, again, these expectation numbers haven't been ameliorated, actually. So interesting to see how the numbers actually come in, but they are expected to be positive or remain positive, the core and the headline number for the month, but slip a tad. So 0.6 of 1%, the last recording 2 months ago. We'll see what they look like tomorrow. More importantly, we have NFP, and I'll be live for you with this on Wednesday. Headline is 70,000. I was looking at the earlier before we came live. I was looking at the Bloomberg and the Reuters polls for this month. We've got 70,000 is the average on the Bloomberg poll, and this is the one that's been posted here on Forex Factory as well. So rise, quite a significant rise from 50,000 last time. Earnings expected to hold sway as well, and unemployment rate to remain at relatively low levels at 4.5%. Some have seen questioning that number might start to rise. Remember the wider U6 measure, which was touching 8%. That might be looking to tick higher as well, but we'll still see what that data looks like. But remember, we looked like we had clean data, but because of the delay, if we click in here and see it's only 5 days delayed because of the shutdown. Is it going to be, as this headline here is from Forex.com, is it looking for a March cut? Well, maybe, but we'll see. Anything under 100,000 hasn't really spooked the market as many as people thought it would, but there's quite a variance. We've got Standard Chartered looking at expectations of an actual contraction of around 10,000. And then at the other extreme, we've got 135,000. I think that was from Citibank. I can't remember the actual bank that was putting that out. But look at the revisions as well and see what that brings. So non-farm payroll Wednesday, the 11th key. Thursday is the weekly claims as normal. And then on Friday, we got the delayed CPI. So this is, again, only 2 days late. It was supposed to happen on Wednesday, the 11th. It's been delayed 2 days because of the shutdown. Is it going to continue this cooling level? We look at the core monthly number here, to 2.21%. It has been going down. The sort of people are arguing that Trump is saying it's moved significantly, but you can see that it's not on a monthly, certainly on a monthly basis. Yes, the levels are going down and have gone down over his term, but not perhaps as much as his headlines might suggest. So it's fairly constant. Remember, this is still prices going up; it's not prices going down. And we were very high. Obviously, COVID times, we went to monthly ranges nearly a 1% per month. We were moving higher, and took a while for it to come down during Biden's first half of his tenure. But see what that looks like. Remember the CPE numbers, producer price, the consumer spending and consumption. The Fed take that a bit more of a weighting when they're looking at their next cut. Will they move in March? And while we're talking about that, let's have a quick look at what the expectations are now. It haven't moved recently. They went to obviously we had that January. Nothing was happening. Nothing was going to happen. We played a very straight board. Will they be to actually move, or will Powell go? Markets are very much expecting not to have anything to happen before Powell leaves. So the March meeting is still an 82% chance of nothing happening. The April meeting, which is his final meeting, again, a 32% chance of a cut. So that's rose a little bit over the last week or so, from 25% it was, I think, they were 23% from last week. So it has ticked up quite a bit, but what has been, a month ago, is where we are now. So April, whether we'll again, we'll have to see some more significant movement, either in inflation ticking up. The jobs market continue to weaken a bit further for some more stimulus in the rate cut area from the Fed. But they've got this double mandate, and they've got to keep them. It's keeping them in balance, not one causing the other one to move in the opposite direction of where it wants to go. So likelihood is that nothing's going to happen until Warsh takes over. Obviously, he needs to get his feet under the table. New man, new job, new chair. But he's very much in the mould of the administration. So June is much more likely. If we've got in June, the likelihood of a rate cut by then is 70% here. This is the likelihood of a cut, and only 25% of no change by June. So we'll see, obviously, how it all pans out. These are real live, not live, but this is real skin in the game, real options, and what the futures market is expecting the Fed funds rate to look like by the middle of the year. So obviously keep your eye out on that, my friends, and I'll keep you updated as things change. So if there's nothing to have a look about, let's have a look, see if we can have a look at some trades. We've been here, what time is it? 4:45, last 15 minutes. Let's see how things have closed in the in the UK and in Europe. So the DAX markets, let's come back to the 5 minutes time frame. See if it did mean anything for us to get our teeth into. I say we did quite well this morning. There we are. We've had a strong move into the close. So just put the close on here. So that's the close in 5 minutes. 14:30 is when Frankfurt closes, when London closes. There's obviously a bit of wrap up in the cash market, but the trend for the last hour or so, since 3:30, 3 o'clock, has been to the upside. So this mean reverting strategy was a bit sideways action here. Movement down. We had a cross here, so you'd have gone long. Let's just move that out of the way. So there's the cross there. We touched the outside of the Bollinger Band there at head of the open. Lots of volatility there on 1430 doji candle, still sideways really, and then but we were, they'd already moved here. So on the open, you could have bought that. Had your stop loss down there, it'd gone up, came back. If you hadn't moved your stop loss, you'd have still been in that. It's moved down, hasn't crossed. You can see we're still moving higher. So although we got to target one instantly, if we'd got in here, target one, target two. If we'd left our stop loss where it was, which I may have pulled it up there on that 5 minute time frame, it would have taken me out as it's come back here. However, they're new highs. We haven't crossed, so we are not in an overbought. So I would be happy to have bought that again. In fact, that's something similar to what I did in my live chart. Caught high, except I was trading on 2 minutes, not 5 minutes. So big positive candle there, half an hour after the open, and then we've just tracked higher, haven't we? So I'd have bought there and probably just trailed my stop loss up and waited for perhaps a touch and closed a little bit of it on that one, but it's a weak candle. It looked like it may be petering out 24,929, still 50 points short of 25,000. So may not have got squeezed out there, but got my stop loss probably a bit tighter as we've moved up, and I may have been taken out as we've stalled up here around about here at 4 o'clock. But there we go, from Friday night, because I remember we were long on the end of day basis. We just hit target one there. Looks like we're just shy of oh no, there we are. Target one's been taken out. 25, 23. We're at 25, 24. So target one on our end of day trade has closed out for 50 points from 7, no, it's more than that, isn't it? What I'm talking about. 25, 225, 350 points or something like that. But percentage wise, quite hefty as well. So take you back to the 4 hour time frame. That's what we got in on Friday night here at 24,775, and target one has just been hit, as you've seen now, at 25,023 was target one. So half of that will have automatically been closed on my trading platform, and the stop loss, as I'd done earlier, in fact, pulled up to entry. Anyway, we'll see where this candle closes. It's a 4 hour candle, this one. It only started at 3, so we'll see where that closes. See if we pull the stop loss up above our entry, which is probably what will happen. You can see it on the hourly chart. I think it was a I can't remember which round it was. I think this might have been a more aggressive one, and the Dow was the more relaxed, conservative approach. Let me just find that. So the Dow, the Dow should have been stopped out when it was still in money. So the DAX is a standard end of day entry. So that is going to mean that we do sort of trail it around about the 4 hour rather than the get too close with the 1 hour. So, but stop loss will get moved up, not necessarily on this 1 hour time frame, but to the pre-market high, but certainly get rammed up a bit on the 4 hour. I forgot about the 4 hour, same level, isn't it? There we are. So it's still there. So we probably will move it up to the bottom of that candle. I'll do it here. That's the entry. It's the stop loss. Just shy of that 4 hour candle because it's an end of day basis. So so the second half of the trade is still locking in this bit, green to the red, and 50% of the trade was closed literally minutes ago, as you just saw, as we went to our 25,023 on the Dow. There we go. That's our move higher, and this is what we were doing, weren't we, on a 1 minute basis? So we would have here on the 5 minute basis. Sorry, I would have trailed this up, but we're waiting for a cross or a touch to get out completely. So we'd probably got out. If I hadn't got out here, as it's come back for a few red candles, I might have got out here. But certainly, I'd be out of this now, even though it's touched. Didn't really blow the cross, and it's continued to trail high. So I'd probably have my stop loss a bit too tight. But I'm, happy days there on the DAX. The Dow here on the 5 minute time frame, a bit more choppy. But again, follow the rules. Trade what you see, not what you think. So again, touch of the outside of the Bollinger Band here at 1 o'clock. We're looking for a cross down, another touch, down candle there. We haven't crossed yet to the downside, so another down candle here at 20 past, up candle at 20 past, down candle at 25 past. That would have been enough to get me in. I wouldn't have taken anything off because it's too close. So that would have been the short position there. We've had the move. You see we've had the divergence in the K and the D line. We've got a bit of fresh air between them. We've got another down candle. So that would have got short there. I'd have held this till we touched the outside of the Bollinger Band for the first time. So that would have got in there, got out here, and then trailed it down because the stochastics are still with the price action moving lower. We're into the overbought. So I've got a bit, do we close this out? Well, not yet because we haven't touched. Let me just see what's happening. See, we haven't touched. We're still air between them. So, don't get the stop loss too close. Move it down. There's the next big candle there at 4:15, just ahead of the open. So I might have been tempted to get out, but we then got a doji candle there 10 minutes before, and then we had an up candle here at 14:25. It's exactly what I did actually, ahead of the open, and then just wait for the volatility of the open to cool down. So if we hadn't have got out as on the first touch, we'd have certainly got out there. That would have been our closing out. So we'd got all of that moved down, or certainly most of that moved down quite nicely. There's the volatility of the open, upside, downside, doji candle on the 5-minute, a negative doji candle, again moving lower. But this, again, if the system is trying to trade the open, again, I'm not a big, trying to avoid the open, but certainly before it, some 15, 20 minutes after things have settled down, I'm happy to go. So this is touched out. So we're looking to go long here, and it's sort of triggered there long, just ahead of the open. But we were still going down. So that wouldn't have worked out. That might have been an option as we've gone up back over, because we went down to 49, under 49,900. That was the one we got stopped out, wasn't it? Down. And then we've moved higher there. So that's the final big move lower there, 15 minutes after the open. We tested lower again, and the low of the day at the moment is 49,825. But then we've now turned around and it's moved really aggressively, quite nicely. Trailed that one up, and then got out there as it's come back down. And again, next candle, you'd have gone short. So this went short. Last short, clear short for me there is 15.15, just before we went live. Stop loss up there initially. Target 1 hit. It's retraced. So if you pulled your stop loss down too tight, that would have stopped you out. But look what's happened. We got to target 1, moved lower. And then the stochastics have crossed. We moved out, so you're out anyway on that one. So yeah, successful trade there around the European close here at 14:30 my time here in London. So there we go. The other thing I mentioned on the headline was talking about the fix. Remember the 4 o'clock fix? We can see some significant movement around 4 o'clock ahead of the close as well. If we look at the markets here in the UK, so 4 o'clock can be a key time both for Forex and gold in particular. What is the fix? Well, the London fix is when people say, what's the price of gold today? Well, it's quite often what's agreed at round about the 4 o'clock time. It's not as significant as it used to be. It used to be gold paper driven and liable for lots of interference. There's all sorts of scandals around it over the years, the fix. But it's basically where the banks, the credit card companies, the insurance companies say, well, what's the rate for sterling today, the 9th of February? What rate are we going to charge? What's the gold rate today? What's the silver price? What's the copper price? All of that was done around the London fix, which typically was where the banks agreed a price between them, offering bids and offers around certain levels. The options market also got involved as well. Obviously, it happens in New York as well later on in the day. But certainly the 4 o'clock fix 4 o'clock UK time is when it was done. So you can see some volatility around that time, and obviously options expiry also has it's another whole area that I know lots of people just trade individually. So one to watch out for. So if we just use the here, obviously the derivative market's a bit less clear, but if we look at the just use the 4 o'clock, see if there's any volatility around 1600. So we've got a 1600, not really, must have here as far as the FTSE was concerned. That 5 o'clock candle or that hourly candle, it was just part of the up trend into the close, wasn't it? Strong move. There's the 430 candle. Buyers sweeping up, and then we've back down just ahead of the close, the cash close here on derivative market. So hasn't had an impact today, Monday. Sometimes we see it, I say more, sometimes on the gold market. Again, if you just use the 4 o'clock candle, either the hourly candle or the it's a 5-minute hourly candle. We've got the 15-minute candles. There are a lot of activity around there today. Not particularly. It's actually quite small, wasn't it? It was more activity half an hour before at 3:30, an hour after the US cash market closed. So there's nothing to tell us there. Is the hourly candle for 4 o'clock significant? Well, not really. No, we're pushed to new highs, aren't we, on the day? So again, the gold market not particularly tradable on that next time. So, I mean, it can be significant. It's less significant it was in the past with the 24 hours derivative electronic trading, obviously, but it's still nothing. It's still something that can impact markets. The 4 o'clock London fix in London, particularly Forex, and I'd argue London still is key for Forex. And the commodity markets as well, the London Metal Exchange and other commodities, but particularly gold as well, around that 4 o'clock fix. So that's what that is. So there we go, my friends. Any questions? If not, I will see you tomorrow. Tomorrow we're doing an early one. Yeah, we're going to do the same thing, except we're going to trade the open tomorrow. I say no particular data today to get our teeth into that's really going to move the markets, but we are waiting really for the key inflation data on Friday and the delayed jobs numbers from non-farm payroll on Wednesday. We have got the core retail sales numbers tomorrow. Probably should have been live for that, but we're going to do the London Open instead. So come and join me for a bit of a live trading on the DAX and anything else that's moving the markets, anything else that follows the rules, and see how we can get on tomorrow morning. So see you then. Take care. Have a pleasant Monday evening. Stay safe. And as I was saying to a guy on Discord this morning, remember, always manage your risk, guys. That's what keeps you in business. And if you have too many big losing trades, you can very, very quickly blow your account. So keep it all in trim is the mantra, and always has been. So be good. See you then. All the best. Take care. Bye-bye.